Let's just first touch on an announcement by the CBN. By 2012, they indicate that they are going to be imposing a maximum withdrawal limit and deposit limit on individuals and companies. Now, for individuals, it's going to be 150,000 naira, and for companies, up to 1 million naira can be withdrawn. What impact is this likely to have on the Nigerian economy, given the fact that up to 70% of the economy is still cash-based, it's still based on the informal sector?
First and foremost, the policy was agreed between the CBN and the Bankers Committee, which is made up of the banks, the commercial banks. And this implies that the banks know the work that is up for them. Between now and June 1st, 2012, they have their work set out. An NOI Gallup poll conducted last year says that about 62% of Nigerian adults are outside the banking system. On the other hand, about 70% of the economy is still informal. So what that means is that for that policy, between now and next year, the major challenge is how do you bring in the informal sector into the banking system. Right now, the trading and retail sector is about one of the largest contributors to the GDP after the agricultural sector. And most of the transactions, especially in the eastern part of the country, are cash-based. The CBN intention is to increase the use of POS terminals, ATMs, bank instruments like checks and drafts. So how they actually sell this policy and push this policy into the rural areas, into the informal sector, would actually depend on lead to the success of the policy. The important thing is that if the policy works out well, then we're going to have a cashless society. We'll reduce the cash movement in the society, improve security, but then there are still other issues. Look at, for instance, there's stiff penalties with any withdrawals above 150,000 for a retail investor and 1 million above, for a corporate investor. But look at instance where a contractor or a farmer who has to go around farming settlements, a bulk purchaser of goods, of farming goods and commodities, who has to go around the, local farming settlements and pick up about goods worth 5,000 from as many as 50 farmers. He needs cash to do that. So he has to have about 250,000 naira, and with the policy of saying 150,000, then he has to pay the extra penalties. So the question is, how does he bring these local farmers into the banking system to reduce his own costs? Because if that is not addressed, then it will affect inflation and price levels.
Jimmy, I'm going to move on to one last question. We just got time for one last question. Sorry about the bad line there. FCMB announcing its results yesterday, the 7th of 21 listed lenders to report some positive earnings. Just your take on the earnings coming out of Nigeria at the moment from the banking sector, and also its plans to form a holding company. Do you think this is a good move for this mid-tier bank?
Now, for many of the banks going into the holding and international banking license or standalone banks, the issue you have to look at is while they had this unwieldy conglomerate structure, like a bank like First Bank, you have to look at how much was coming from outside the banking sector. If you look at First Bank's numbers for last year, you find out just about 7.2% was coming from the non-banking sector. And now management has chosen to keep the other structures. So amongst the tier 1 banks, for instance, UBA and First Bank have chosen to keep the holding structure, while GT Bank and Zenith have chosen to become international banks, and they'll be spinning off all their non-banking structures. So for these two, UBA and Zenith, GT and Zenith, who happen to be the most efficient banks amongst the tier 1 banks, that would enable management, use its core strategy for its primary banking job, while First Bank and UBA need to convince analysts and investors that if they hold on to the unwieldy conglomerate structure of having banks, mortgage companies, insurance companies, real estate firms, registrars, stockbrokers, and all that, what are these non-banking units contributing to the entire group? The figures from these non-banking units are quite low. So what's the strategy to improve the numbers? What's the strategy behind keeping the numbers? Is it a Is it a profile thing? Do you want to boost your profile? Or is it an ego thing, really? But for banks like GT, Zenith, Fidelity, Access, they've come out with a clear strategy that, look, we're not holding on to the non-bank, so we can concentrate on our core strategy, which is banking.
Jimmy, it will be interesting to hear their insights into the rationale behind those moves.